Okay, so welcome to everyone who's joining. We will wait a couple of minutes, give everyone time to come in before we get started. And I'm here today with Shane Clark from EuroAmerican Financial Advisors. And where are you today, Shane?
I'm in Sevilla, in Spain.
And have you been living there a while?
I've been here going on 8 years now. So I've been an expat almost 18 years, living in Spain for about eight. So started in the UK. I'd I'd had my fill of the rain and we moved south.
Right. Yeah, you can see
Yeah.
I'm well wrapped up in the UK. You can see your shirt sleeves. So good call. And I was going to say, where are you from originally?
From Detroit in the US originally. So originally in Michigan, worked there for a few years and then moved over to the UK in Glasgow.
Right, goodness,
So
yeah.
I should specify Scotland as
Yeah,
well.
yeah,
Yeah.
yeah. Still the UK just about, and but definitely in the deep end weather-wise.
Yeah.
So yeah.
Yeah, absolutely. Some good years there, but the weather certainly wasn't one of the redeeming qualities.
Right. And what took you abroad in the first place? It's always interesting, expats, what
Yeah,
takes people abroad.
yeah, they usually say work or love, right?
Hmm.
For me, it started as work. So I went to do a master's degree in, I got quite interested in currency trading and kind of um, what's called the carry trade, when you borrow from one country with a low interest rate and then invest in a country with a higher interest rate in the bond market. And the school that I went to had a pretty good program, at least I thought, in currency trading. So I wanted to do that. So I left my job, moved overseas, and then I stayed for love.
Yeah.
Yeah.
And here you are, 18 years later.
Yeah.
Um, so and congratulations, by the way. I know you have a new family arrival, and thanks for making the time for this.
Yes. Yes. Thank you. Yeah. We have our third daughter. So you can see my the bags under my eyes are serious, but if I have a long pause today, it's not normal. It's just a lack of sleep.
As I say, thanks for doing this. So okay, look, I think lots of people joining. Let's just give them another minute maybe. So lots of people still joining. Um, and yes, we can see name of the firm in the background. Do you want to tell us a little bit about? Well, I suppose you'll cover the firm in the presentation, but
Yeah.
yeah,
Yeah. We're in headquartered in Sevilla, licensed with the Spanish investment authorities. We can passport our license under MiFID to 11 different countries, mostly Western Europe. And we added Greece as well because we like Greece. It's a nice destination. It's got an interesting visa right now as well. So it's attracting more and more people, I think, in recent years.
excellent. Okay, well look, let's get started. So I've just got a little intro to read here, and then I'll hand over. So, hello, welcome everyone to day two of the 2025 US Expats Financial Conference, sponsored by Expat Focus, the web's favorite destination for anyone moving or living abroad, and Wise, the leading provider of fast, low-cost international money transfer services and multi-currency accounts for individuals and businesses. We have a great schedule for you consisting of 9 sessions over 3 days, covering multiple aspects of financial information for Americans living abroad, with perspectives from some of the world's leading experts in their fields. Today is the second day of the conference, and for this, our second session of the day, I'm delighted to be joined by Shane Clark, President of EuroAmerican Financial Advisors. We'll be discussing financial planning considerations for Americans living abroad in 2025. Before we start, please bear in mind that the information presented is for general educational purposes only, and you should always seek your own personalized financial advice. Note also, while the conference is free to attend, if you'd like to leave a tip for the organisers, you can do so using the PayPal link I'll drop into the chat window at the foot of the screen. Shane will be answering your questions at the end, so please add them in the Q&A pop-up at the foot of the screen throughout, whenever you think of them, and we'll try to answer them all, time permitting. So without further ado, over to you, Shane.
Thank you, Hugo. Thank you for having me and thank you for organizing the conference. Thank you to all the attendees. I'm going to try to have some useful information today. I'm going to share my screen here. I've got a presentation prepared. There we go. So a little bit of background on myself, and we have two firms actually. On the firms, our mothership, if you will, is called International Asset Management. It's located just outside San Francisco in California. It's been around kind of 22 plus years, founded by my business partner, Tom Zackestel, and it caters to US expats. So Americans living abroad in any country in the world, essentially. With the relationship with this firm, the US firm does the portfolio management on the accounts, the trading. And then our Spanish entity, we set up around 4 years ago to focus on our existing clients living in Europe. And then for new clients as well, we're licensed with the Spanish investment authorities, headquartered in normally sunny Sevilla. And we provide the investment advice and financial planning from this firm. A little bit background on myself. I'm originally from the US, from Detroit. I've been an expat for 18 years now, living in Spain for around 8. And we're not only looking at investment advice with the firm, but we also have relationships with people on the tax side for the US returns, for your local returns as well, help with real estate. We can put you in touch with anyone else you might need. So kind of jumping into why is it so complicated being a US expat? Where did all these problems arise from? Really, the center of the little pie chart here is citizenship-based taxation. So the US is really one of two countries in the world that still has citizenship-based taxation. That means that wherever you live in the world, if you're from the US, you're still going to have to file a tax return in the US every year. So let's look at an example. If you're from the US, you move to Spain, you're going to pay taxes in Spain once you become a tax resident in June, file an extension for the US until October 15th, and then you'll file a return in the US after October 15th, or before October 15th, I should say. And what you're going to use is either a foreign tax credit or the foreign earned income exclusion. And that means in the joint tax treaty, you're not going to be double taxed usually. So that's kind of how it works. Most countries have residency-based taxation. So Hugo, for example, is from the UK. If he were to move to Spain, he'd just be paying taxes in Spain. But the US has their own system. The next one is FATCA, the Foreign Account Tax Compliance Act. It's quite a mouthful. That originated around 2010, and it was really to limit people hiding money abroad, people not reporting foreign assets, avoiding taxation, things like that. So the idea is that financial institutions need to collect information from you when you open an account, and then they need to report that to the various tax authorities. So if you move to Germany, you open an account in Germany, if you can. A lot of banks and brokers won't work with you. But if you can, then that institution needs to report to the German tax authorities and the US tax authorities, John Smith has an account with us. Now, this is one of the reasons why the US brokers won't work with you anymore. So a lot of people who come to us, they receive a letter. Wells Fargo told me, hey, now that I've become an expat, they're not going to work with me anymore. And that's because of FATCA. It's just too much compliance for such a small portion of their revenue to maintain a department to manage this. So places like Fidelity, Wells Fargo, Morgan Stanley, Merrill Lynch, these firms typically won't work with you once you tell them that you're becoming an expat. And that's why we've specialized in this. FBAR is the report of foreign bank and financial accounts. And this is a form that you have to file every year for your US taxes that says if you have over $10,000 abroad cumulatively across multiple accounts. So you could have 5,000 in one, 6,000 in another. That's still 10,000, over 10,000. So you have to report that to the US IRS every year. PFIX, this is an important one. Passive foreign investment companies. So when you invest your money, if you choose to do it abroad with a foreign bank or brokerage account, they're probably going to put you in funds, mutual funds or exchange traded funds locally, which are going to be called PFICs because they're passive foreign investment companies. So they're going to be distributing dividends, and it's going to be treated negatively and punitively on your US tax returns every year. Our tax advisor friends tell us that to complete the PFIC form for each PFIC you have, so if you have a portfolio of 10, they have to do one for each. It takes 40 hours to complete, and they're going to bill you, the whole time for their work. But also then you're charged a penalty in the US every year, and it can be as high as ordinary income rate on any gains in the fund that you have to pay out every year. The next one is MiFID, Market in Financial Instruments Directive. There was MiFID 1, which is basically an EU law, EU-wide for all the member states, stating what the financial regulations are. And then there was MiFID 2, and now MiFID 3 is going to come out either in 2025 or 2026. And it essentially states what your rights are as a client and what our responsibilities are as a firm. So firms who are not regulated or licensed in the EU don't have to comply with MiFID. We do, and it's an additional layer of information, but also protection to you as a client. The last one is packaged retail investment and insurance-based products. And if you've done some research looking online to see what types of products you can buy, you've probably come across you can't buy US exchange traded funds once you live abroad. This is why. So PRIPS is stating that if a fund, a US exchange traded fund, is being offered to somebody in the EU, it has to have a key information document, a KID statement. And the problem is these US exchange traded funds can't produce this document. It's against the rules from the Securities and Exchange Commission because they're forecasting performance. The SEC says you can't do that. So they don't produce this, so there's no way they can offer you these exchange traded funds. So as a retail client, then you're left with having to have an all stock portfolio. There's a solution. I'll tell you later. So questions I think you should ask yourself if you've moved abroad or you're looking to move abroad, you have a financial advisor in the US. They're a US-centric financial advisor. What value do they add to you? So what do they currently do for you? Do they invest your accounts? Do they provide tax optimization advice? You should invest in a 529 plan or an IRA or a Roth or a rollover, different things like that. And they might have questions for you as a client, like, have you thought of X, Y, and Z? And then when you move abroad, there's a whole nother layer of complications. So then you have to ask yourself, does my previous advisor, are they licensed to have clients in the country I'm moving to? And I think if you're looking at, you live in the US, you have a US centric focused advisor. You move to Spain, for example, you have someone who understands the Spanish aspects, taxes, investing, products. But then as an American, the issue is the cross-border element. So there's really three pieces in play there. One country's law, the other country's, and then the elements of how they interact together. So what we do, what we specialize in and have set up our two firms for is to offer cross-border investment advice. So we offer investment advice on how to structure your investment portfolio to optimize the tax situation, understanding the joint tax treaty between the two countries, and then maximize your returns at your given level of risk. Something else we do is we coordinate with your financial team. So if you have a complicated situation, you're from the US, you live in Germany, you've got assets in the UK, you have people that you're going to leave money to who live in a fourth country, this is quite complicated. And in order to get it all right, you need to have parties working together. You need to have your US CPA, you need to have your local tax advisor and estate planning attorney all coordinating with your investment advisor as well. And that's something that we do. Also, we have knowledge. Years of doing this, we've seen a lot of different situations. So we know questions to ask maybe your lawyer, your CPA, your tax advisor that you might not know because we've seen a similar situation before and we learned from it. We thought, next time we do this, we'll know, this key information that saved people lots of money. And then the other service we offer is financial planning. So we create three personalized financial statements, a balance sheet, statement of cash flow, and an income statement. We incorporate any goals or life events coming up, and we project it all into the future. And we can have different milestones, retirement, through retirement, maybe 5 years before retirement. And we can run different scenarios to get an idea of the probability of you achieving those goals given your level of assets. So I think, when you move abroad, it's very important to have a cross-border advisor. And in our case, our firm IAFA has a MiFID license with the Spanish investment authorities, and we can passport to 10 other countries outside of Spain. In my case, I have the European Financial Planning designation, which is like the CFP in the US, Certified Financial Planner, except it's on the EU side. My partner Tom in the US has the CFA, Chartered Financial Analyst, and the CFP, Certified Financial Planner. So between the two of us, we're specialized in each country and the cross-border element. And then also, we're expats as well. So we've seen all of these issues personally and lived them ourselves. We understand the frustrations sometimes. Something else we do, I won't stay too long on this one, but it's a checklist. So when you move abroad, there's issues kind of before you move that you need to get right, just after you move, and then ongoing issues. And this isn't an exhaustive list, but it's something that when clients first come on board, we kind of like to go through to make sure they haven't missed something. For example, selling a house. So if you're different countries in Europe have different rules on capital gains for primary residence sales. Spain, for example, if you were to sell your house after you become a tax resident in Spain, you're going to pay capital gains on it in Spain. Whereas usually you probably wouldn't have in the US. You want to avoid that. So the best thing is to speak with immigration attorney or tax attorney here on what your options are. If you didn't know that and you've already moved and you sold your house, you have some options if you reinvest in a new primary residence within 18 months. And there's lots of these little rules that make a big difference on the tax side. Excuse me. So we'd like to go through this checklist to make sure everybody's aware of different things that you wouldn't necessarily know about living in the US. Advance that. Now, if we're going to do like top five, financial issues for expats, cross-border financial planning and investing, custody, what to do with your money, tax issues, both domestic and in their country of residency, some portfolio considerations. We'll talk about all of the myriad of elements around currency, how to avoid risk, best way to move it, and then some portfolio considerations or pitfalls to avoid. So this first one, if we're looking at financial planning, a financial plan is a comprehensive look at your current and financial future. And really the plan has two parts. One of them is a numbers part. So we create the three financial statements, we project them into the future. We can also run different scenarios. So everyone has these questions, is it better for me to rent or to buy? Is it better for me to live in the US for 5 years and then move over, or to live over in Spain now? What do I do about Social Security? We can do a lot with the financial planning software. By no means is it magic, but we can run a lot of different scenarios. We can change the tax codes and see which jurisdiction makes more sense and help you make a decision based on that. And then the non-number side is, oftentimes people ask me, do I have enough money to retire? That's kind of more numbers driven. Does it make sense for me to move to Faro? I think that's always going to be a personal decision, but we can provide a foundation based on the numbers to help you make that decision, or to know peace of mind. You've got enough money to retire. Or if you don't, we need to make changes. It gives us information on the investment side. Maybe we need to be more aggressive with your investment portfolio. Maybe we need to be more conservative. So some examples: buying a property versus renting, how to fund children's educational accounts in the future, what to do with a planned inheritance coming, maybe estate planning, those types of issues we can help with. Second issue is custody. And what I mean by custody is where your accounts are going to be held. So, for example, if you have your accounts with Merrill Lynch, they're custodied in the US at Merrill Lynch. So, where to put assets? It's common for people to think if I'm moving abroad, I should take my assets abroad. Or, if I'm living in the EU, I should have my assets in euros because that's where my expenses are. So, all of these are pretty common questions people have, and we kind of work through the different risk and rewards of each. So, custody, if you're from the US, you always have to keep your retirement accounts, IRAs, 401ks, Roths, those have to stay in the US. There's really only two custodians who will work with you as a US expat. I guess there's three now. StoneX is a new one, but the two kind of long-standing ones are Charles Schwab and Interactive Brokers. And there's benefits to each of them. Interactive Brokers, you can have multi-currency accounts. So it's nice to exchange money and also to wire out in euros. Charles Schwab has Schwab Domestic, Schwab International. Once you move abroad, you go into Schwab International. Then there's two other layers. There's a retail client, which means you open the account yourself, you manage it yourself, or an institutional client. If you're an institutional client, remember earlier when we were talking about PRIPS not being able to hold US exchange traded funds? Well, this is the loophole. The way Schwab views PRIPS is they're not offering US exchange traded funds to you in Europe if you work with a US advisor, they're offering them to the US advisor. What that means to you is you can hold US exchange traded funds by working with a US advisor because you're an institutional client of Schwab. And both of these are, much, much less expensive than foreign options. So if you go into, a bank in Europe and open an account and ask to do investments, the fees from the funds, the custody, the platform, the advisor, the management, it's probably going to be around 5 to 6% per year. Whereas keeping your money in the US, the fees are much lower. With Schwab, for example, there's no platform fees and they don't charge you for trading. The only way they make money on your account is on your cash balance. So, like any traditional bank, they don't pay out interest, they loan that money out. That's how they make money. So, what we do is we keep a low cash balance, we invest in a money market fund. Your expenses are quite low. So I think, you have to think about why you are questioning moving your money out of the US. If it's to get access to foreign markets, we can do that from the US. If it's to get access to the euro, we can do that in the US. If you want to have your money diversified from the US, you have to think, why am I doing that? In the US, we have SIPC insurance if something happens to the bank account. A lot of foreign brokers don't have that. So our advice, keep your money in the US. Also, tax reporting. This is huge. Every year, you have to file the US tax return. If you have a taxable account, it's going to produce a 1099 every year. If it's a US custodied account, you have to give that to your US CPA to file your taxes. Foreign accounts aren't going to have that. It's going to be a lot more muddied when you have to file these returns. I already mentioned the SIPC, the reporting. If you get audited, you want all of these forms. It just makes it a much cleaner process. So I think, when we're looking at tax issues, a lot of people, when they come to us, they say, I've used my tax guy for years. I trust them. I don't want to change. That's totally normal. I think the issue is most of the time coming from the US, your tax advisor is going to be a US focused tax advisor. But the key part is someone who understands the joint tax treaty. So how things are treated on both sides. So really, especially the first year, you want to make sure that you speak to someone who specializes not only as an expat tax preparer, but specifically, Germany to the US, and they understand that country's joint tax treaty. And there's usually one or two in each country in the EU who does tax filings for US citizens on the US tax return. But things to keep in mind, you have to file it every year. And then you also have to file in your country of residence, which in Europe usually is where you're going to pay your taxes. Avoid PFICs, don't buy foreign funds. And then I think something that we do specifically is we often use an all stock portfolio because we can manage the capital gains and the taxes, dividends and interests, depending on how they're taxed in your country of residency. We can manage them better than funds. So we manage all of our portfolios in a very tax efficient way, which is a very different approach than necessarily used in the US centric advisors, but also it adds a lot of value. So portfolio considerations, currency. If you've always lived in the US, you've only really had to deal with US dollars. Now you move to Europe, all of your expenses are in euros, all of your investments are in US dollars. This is a risk, and it's something that you need to manage, and there's lots of ways to do it. You can manage it directly, where you physically own euros, or indirectly, where you own companies that derive their revenue from the Eurozone. Lots of different approaches there, but it needs to be something that is addressed. And then moving money. What's the best way to move money? If you go to a bank, it's typically going to be 3% of the total that you move, plus a wire fee. If you go to a currency broker, it's usually going to be between 0.3 and 0.03 and 0.5%, so half of 1% basically of the money you transfer. If you go with interactive brokers, it could be as low as a quarter of 1%. So there's lots of ways to do it depending on how frequently and how much money you're going to move. Wise is a very good currency broker. We have a partnership with them. They sponsored the event as well, I saw, but they do a good job. If you have a large amount, you can now call in and they can walk you through the transaction themselves. Also, they're great because they have two different bank accounts within the app. So you can have a basket that's a US dollar account with US dollar banking codes, account numbers, and then also for euros or pounds, wherever you live in the EU. But that's quite nice. So as a recommendation, we advise investing in a diversified multi-currency portfolio of global assets. Oftentimes, from a portfolio management standpoint, when we see people coming over from the US, it's S&P 500. It's mostly US companies, which have done great in the past 10 years. But right now, we're also at all-time highs. So whenever we see that, it's time to be a little bit more cautious. And our portfolios are typically global portfolios. So we have much more diversification there. Speaking of diversification, different types of assets. So what types of assets can you hold? If you're living in the EU and you don't have access to mutual funds anymore, and you have limited access to exchange traded funds, then it does tend to be an all stock portfolio with some exchange traded funds from the US as well. And how do we manage risk? There's lots of different risks that you would have already had market risk coming from the US, but then now there's the currency element, the cross-border element. We need to look at expenses. And what we do when we look at expenses is, and this is important, you need to take a holistic view of expenses. So if you look at someone's advisory fee versus another firm's advisory fee, if one of them's 1.5% and one of them is 0.8%, you think, I'll go with 0.8%. It's much lower. Well, it might be much lower, but what about the other fees? So if the 1.5% has an all stock portfolio, there's no embedded fees there. If the 0.8% has a money manager who charges 1.5%, then this one's actually more expensive. So we always say, look at all the fees. Ask your advisor about this. And then, if you look at what can you control? So you can control risk and fees. In terms of portfolio management, it's good to have a conversation with your advisor and see what they're going to do. But the things you can control and we can control are those things. The market, unfortunately, we can't control it. We can have a good strategy, but we can't control what's going to happen. We can control tax management as well. And then we advise building a long-term strategy and sticking to it. Whenever the market bottoms out, everybody panics. And that's when we say, let us take the stress of that and you stick to the strategy. Here's some questions. If you're thinking about hiring a new cross-border investment advisor, ask some questions, put them through the ringer. So questions are you a MiFID compliant advisor? So a lot of advisors are only in the US. They don't have a license in the EU. They're not licensed to work in the EU. So it's a good question. What does it mean? What regulatory body are you licensed under? How do I check? Can I see if you've got, things in your past that I should know about? What is your background? What are your licenses? What are your designations? What's your investment philosophy? All these types of questions. And then here's the point. Another important one is how do you get paid? So are you pushing products or are you independent? I think these are both very important things. Do you have performance-based fees? So I would ask your advisor all of those things. Another important one is who are your clients? Are they expats? Are they institutions? Are they high net worth clients? Because these are also very important for what type of experiences your advisor is going to have. If you're a high net worth individual and you're working with an advisor who doesn't have experience working with high net worth individuals, they're probably not going to have access to some of the products you might be accustomed to, some of the solutions if you have concentrated positions or things like that. They might not be able to help you. And then also being an expat specialist. So things like how do you manage currency risk? In Spain, we have wealth tax. What are your methods for optimizing wealth tax? All these types of things I think should come up. What level of service can you expect? Is it an annual meeting? Do you get statements delivered quarterly? How frequently can you call your advisor? I think these are important questions. We often get clients from a large institution where they have an initial sales call with an advisor who understands what's going on, and then they offload all their clients to basically a salesperson who just doesn't really understand the investment or cross-border aspects, and they just answer basic questions in the email. So I think it's important to know what is the life process here. If Shane, am I going to be able to call you and work with you, or am I going to get sent to somebody else? Or whoever you're thinking about working with. I think it's important to ask those questions. Mistakes to avoid, don't buy PFICs. These passive foreign investment companies, they just create a problem and there's no reason to buy them really. Non-compliant US insurance. This is an important one. If you have a life insurance policy written in the US, does that cover you if you live in Portugal? This is important to ask your provider and then also maybe a lawyer or an estate planning person. So non-compliant insurance is an important one. Also health insurance. And a lot of times people think, oh, I've got health insurance in Germany. I'm going to go back to the States and visit my grandkids. Make sure that it covers you. Over-investing in your country of residence. This one isn't as common, but sometimes people think, oh, I'm moving to Italy. I'm going to invest in Italian companies. That's a concentration risk. It's really, you're not diversified enough if you do that. And then not understanding the underlying currency exposure of your portfolio. Sometimes people think if I'm in the EU, I need to own euros to be diversified. But this is what I was mentioning with the indirect currency exposure. So if you own companies in the EU and those are denominated in your account in dollars, they're still getting all of their revenue from the euro. So you're indirectly having euro exposure. Contribution to a non-qualified foreign pension. This is more of a question for your tax advisor, but it could have these passive foreign investment companies in a PFIX, so avoid that. Not using an expat specific tax preparer. I think I already mentioned that. It's important to have somebody who understands the joint tax treaty. That's the paramount part of it. Paying high fees on foreign investments, which you could have bought in the US for less. Again, just invest. Keep your accounts custodied in the US. Failure to report foreign assets on tax returns. If you use a US specific tax preparer, they won't miss that. Failure to properly report on US returns, a foreign business entity. This one gets a lot of people. You move overseas, you set up a company in the country you live in. You don't think you have to report that on your US returns. You do. Uh, do nothing is another common one. Everybody feels overwhelmed. It's too complicated. Everybody in our profession agrees it's far too complicated. But nevertheless, that's the state of the world. I think it's completely normal to feel overwhelmed, but doing nothing isn't, that's not the best solution. I think speaking to people who know what they're doing, who are professionals in this, and taking it in chunks. So I think in summary, do some research on your situation, do some I used to say Googles, but now I guess it's more Chat GPTs or whatever else you do to find information, and then make informed decisions. Speak with different people, see who you feel comfortable with, and the most important thing is you enjoy being an expat. It's an adventure, and we're lucky to have it. So I think that wraps up my presentation. I think we've got some time for questions.
Thanks very much, Shane. That was a great presentation, really informative. Got lots of questions, so we'll just dive in. For our audience, just like to say if your question's tax related, a direct tax question, perhaps reach out to a tax advisor. We have three during the conference: taxsamaritan.com, myexpattaxes.com, and onlinetaxman.com. And so let's focus on the financial planning questions that have come in. Let's jump in with a relatively straightforward one. Are foreign pension funds considered PFICs?
It depends. I can't, I should also preface, I can't give tax advice, but it depends on what's in the joint tax treaty between those two countries, but then also what's in the pension fund. So I know in Germany, for example, there is a type of life insurance pension account, private pension account that isn't considered a PFIC. But here, for example, they're often PFICs in Spain. So I think it's important to ask your tax advisor, or we could look at it and see probably if it would be or not. But usually public pensions are not PFICs. It's going to be private ones typically.
Shelios, what currency risk hedges might you recommend for dollar euros risks?
Yeah, I think it depends. It's more complicated than just what are the solutions. I think we need to know what is the time frame? What are you planning to use this money for? And then we can have a conversation about, what the possible solutions are. So if you're looking at, buying a house in the next 3 months, we'd be much more aggressive on protecting that exchange rate than if you're saying, I want to retire in 20 years. So the three basic options, you can go aggressive with having some type of a contract, a futures or a forward contract to lock in a rate. That's the most aggressive, but it's also the most expensive. If you do that, you're going to pay a lot of money to lock in that rate today. So you wouldn't want to do it for a long time period. Indirect currency exposure, which I mentioned before, and then direct is owning euros. So converting the currency, owning a percentage in euros.
Question about issues with US banks, and I think the same applies to brokerage firms. What solutions are there for having a UK address in this case versus a US one? And how to deal with that situation where, the address you have for your US bank or brokerage firm.
Yeah, there's a couple issues there. If you use a US address on your investment accounts and your bank, if you don't tell them that you moved abroad, the issues that might arise are state taxes. So you should tell them. But if you live in a state that has a state tax and that account produces a 1099 every year, that's going to go to the state tax authorities and they might call you up and say, John Smith, why aren't you paying taxes? That's one of the issues. The other one is not too many work with expats. So if you call them up and tell them, hey, I'm moving abroad, then it's hard to open a new bank account. So there's a few options. The State Federal Credit Union maintains bank accounts for expats. I also believe that United Nations Federal Credit Union does. And then Wise, you can open up a Wise account and have a US and a foreign account that you can exchange currencies in as well. So those are kind of the big issues there.
So somebody says, is it true anyone designated as a professional investor can buy US ETFs while resident in Spain, and that Spanish tax authorities don't differentiate between US or EU-based ETFs when calculating tax liability?
They don't differentiate. Say the last part again.
Is it true that Spanish tax authorities don't differentiate between US and EU-based ETFs for tax liability?
That's much more complicated. I'll answer the first part of this. That is true. If you have a firm designate you as a professional investor, then you can hold US exchange traded funds. The second part of it, I think what you're asking, like EU funds often are distributing, meaning they're paying out dividends and interest every year, or they're accumulating, which means they're holding that in and it just grows tax free. Whereas US funds, we don't have that distinction. They typically just pay out uh, dividends and interest when they're accrued. So how the Spanish tax authorities view that is more complicated, and I would leave that to a tax professional.
Okay, Dan asks, minimum dollar requirement to be a client with yourselves.
Our minimum is 200,000 assets with us.
Rachel says, I've struggled to get a US account of any kind because I'm no longer a US resident. Are there banks or saving platforms that will work with me despite not being a resident?
Yeah, there are. I think the credit union Wise, which I just mentioned, and then on the investment side, Interactive Brokers, Charles Schwab, StoneX, those are all expat friendly custodians as well.
Somebody in Switzerland just said, I just bought ETFs on Schwab International. Is that legal?
Uh, I'm not sure. I have to know more details on that. It's probably legal, but I would have to see, how you're going to be taxed is probably more the question. But yeah, I'd have to know, what nationality you are and all those types of questions.
Somebody says, can you look after clients in the UK?
Kind of. We're not licensed in the UK. If you come to us, if you're an unsolicited client, then we can, look after you. If you'd prefer working with somebody who's specialized in the UK, we can refer you to somebody as well.
Um, if somebody's a dual citizen, does that complicate their financial situation?
Yeah, it can. I mean, it isn't necessarily complicated, but there's different kind of points. Taxes drive everything. So when things get complicated, I think people are usually referring to their taxes. And if you're a dual citizen with the US, then there's probably going to be quite a few additional layers of complications because you're going to have US taxes. There's no way around that. So you're looking at a state tax versus inheritance tax, filing a tax return in both places. So yeah, it's definitely, if you're a US citizen, you're living in Spain, for example, and you're thinking I can get citizenship through Italy from my grandparent, that doesn't necessarily complicate your tax situation further than it already is, if that's the question. But I would speak to an attorney about that.
Okay, somebody says, how would you recommend transferring 529 funds to adult children?
Again, that's probably more of like an individual. We'd have to see where they're a tax resident as well and more information on that specific one.
Somebody says, does your fund provide advice-only services rather than managing investments?
Our fee structure is based on the investments we advise on. So we don't, our clients are typically in it for the long haul. We charge based on assets we advise on an annual basis. So we don't do kind of like a one-off fee-based consultation.
Can you have clients in Mexico or in Colombia?
Our US firm can, yeah.
Yeah, you mentioned there are sort of sister firms.
Yeah,
So,
the US firm, International Asset Management in San Mateo, California, we can help US people in those countries.
yeah, and somebody else asked, can you cover Switzerland?
Again, it's that gray area if you come to us, but I would say we work with other partners you could work with in Switzerland as well.
Somebody else, any advice for a US-based FA looking to move to Greece who would like to continue working with expats?
Yeah, probably reach out to me. We can have a chat on that. That's a longer conversation.
What about life insurance or other insurance products bought abroad? One bank said US person can, the other bank confirmed that US persons can't own life insurance products abroad. If that makes sense.
You can. It certainly depends. This is where we go back to the holistic view on fees. So why are you buying the life insurance product and what kind of a product is it? Like in the US, there's term policies where you pay, a couple $100 a month, and then if you die, your family's taken care of, and that's a lower cost. It's not an investment product, it's a true life insurance product. Whereas I think probably you're talking about investment products that are structured in a life insurance wrapper. And those typically have fees between, at least in the EU, between 5 and 9% per year. So in some cases, you won't even pay taxes on the gains for 10 years. But if you're paying, 6 to 9% a year in fees, you're just going to lose money slowly. So, we think it's very important to take a holistic view on the fees.
Somebody said, do you offer an initial consultation just to review a portfolio?
We do. We do initial consultations to review the portfolio. We could do that. Yeah, you could reach out. We could take a look at how you're currently invested, put together a proposal.
Yeah, there are lots of questions that maybe if we don't answer them, reach out to Shane directly, and the email address is EAFA at EuroUSAFA.com. I'll drop that into the chat in a minute. But if we haven't answered your question, or you've got a question about your individual situation, just reach out directly. So somebody says, is it best to invest in individual global stocks in various currencies for an investment portfolio?
Versus investing in funds.
Uh,
Yeah,
yeah.
I think you want to be diversified globally. If you open an account with, say, Interactive Brokers, you can trade on global exchanges. So you could hold physical stocks denominated in local currencies all over the world. That's a lot of work, and you'd have to do a lot of research to make sure that you're buying the right funds. But that's an option.
Just going to drop your email address into the chat. Um, just so it's there. What percentage of my assets would you suggest keeping out of stock bond markets to be used as an emergency fund or income cushion during market downturns?
Yeah, I think there's kind of two parts to that. Usually the kind of rule of thumb is 6 months. So whatever your expenses are for 6 months, you want to keep that amount of cash that if something bad happens, you can live for 6 months before you can find another employment situation, if that's your question, or if you're retired, keeping 6 months in cash or something quite liquid isn't a bad idea.
Hmm. Somebody says, what inheritance planning do you provide for expats who still have TOD accounts in the USA?
I think inheritance planning is quite complicated. We do the financial aspect of that, but the estate planning and tax and legal side of it, you need to speak with tax attorneys and estate planning attorneys who we can put you in touch with. And then typically how that works is we would form like a little financial team where we would work with the attorney, you, and potentially a CPA in the US to make sure that everything is streamlined, for your situation.
Um, so Mitchell says, do you have any thoughts on how expats living abroad plan for inheritance taxes? So I guess that is estate planning again, because he goes on to say, I have two children that live abroad with me. Both have dual citizenship.
Yeah, I think it's again pretty situation specific. So I don't want to go into too much detail because which country you live in makes a big difference. even in Spain, which region you live in makes a big difference on what the inheritance tax are. But in general, it's very complicated. If you come from the US, they tax at the estate level, whereas in many EU countries, they tax at the inheritance level. So who's inheriting the money? It's more complicated in the joint tax treaty where the person dies, who's leaving the money. So for anything like that, the legal aspects, you need to speak to an estate planning attorney who understands the joint tax treaty as well. And we know these people.
How do I transfer large amounts of money from my US bank to an EU bank or notary for purchasing a home or car and not have to show up in person at my US bank for a wire transfer?
Yeah, I think, using a currency broker is probably the best, easiest way to do it. Money Corp, Wise, there's lots of different ones out there. I would compare rates and see who offers you the best rate. But essentially, what they're going to do is give you a call. You say, I want to transfer $1 million into euros to buy this house. They give you a quote on how much it's going to cost in terms of fees, and then they do the transfer for you.
Yeah, just to say again, Wise is one of the sponsors of the 2025 US Expats Conference, and they can help with that over at wise.com. So Stuart says, what about precious metal accounts? Are physical precious metals held in allocated segregated offshore account reportable? Or is it just capital gains on sale that would be reportable? That's, I guess, some part of a tax question, but do you have a view on holding precious metals?
I have a view. I won't go into the tax aspects of it, but we hold around 10% of the portfolio in gold. It kind of evens out excess volatility in the markets and tends to appreciate when there's a market downturn. So it's a good way to kind of take out some of the volatility.
There are lots of questions about different countries. Can you help with expats in those countries? And I think, as you were saying, the answer is that if you can't solicitate clients in those countries or solicit clients in those countries, but you can, if somebody comes to you,
Yeah.
you can work with them. These are, I think, some European countries that you're not covering. Serbia, for example. We talked about Switzerland and the UK. So there are a few questions on that. But yeah, if you reach out to Shane directly, yes, I think is the answer.
Mhm.
Um, somebody says about Wise bank accounts. Well, yeah, have a look at the Wise website for that. Also missed the part on ETFs. Can a US person abroad buy all ETFs or just particular ones? And how to know if a certain fund or ETF is SEC approved?
So if you're living in the EU, generally speaking, the answer is no. You cannot buy US ETFs because of this PRIPS legislation. The way around it is if you work with Charles Schwab as an institutional client, meaning you also work with a US-based advisor, then Schwab's view is they're not offering this ETF to you in the EU, they're offering it to your advisor in the US. So you can if you work with a US-based advisor. If you're a retail client and you open the account yourself, no, you can't unless you're a professional investor. So you have over, a high level of assets and you get deemed a professional investor by an EU financial institution.
So there's an EU rule that prevents Americans in the EU buying US ETFs. Yeah, other than those circumstances you mentioned. Okay. But can a question about avoiding inheritance taxes if you're in France, you're a resident of France but have IRAs in the US. Any tips on inheritance
My
planning?
tip would be speak to an inheritance tax attorney and make sure that anything like that, that would be like there's an event that you can plan for ahead of time. If you can plan ahead of time in case there's structural changes they advise you to make or, things like that.
More questions. Yeah, Shane mentioned about minimum requirement for working with EuroAmerican is 200,000 US. Is that right?
That's correct. Yeah.
Um, And okay, here's one you may enjoy is what's it's actually one of the hot topics of this conference. Obviously, President Trump last year said he was going to end double taxation for expats. We've got a couple of presentations on that coming up in the conference.
Yeah.
What is your take on that?
Well, I think, it's hard to say really what's going to happen with a lot of the things President Trump has discussed. So I think it's important to, have a plan that's going to be future-proofed, regardless of what happens based on what Trump does or what he doesn't do in terms of like what he could do. I think it's a little bit unprecedented in the sense that if we look at traditional methods for solving problems with legislation, Trump doesn't always use them. So it's anyone's guess. I think it's important to work with an expat tax advisor for the time being and make sure that you're compliant in both jurisdictions. And if things change, we'll be prepared.
Um, Somebody says, I use my US credit card to pay my international expenses. Is this cost effective or is there a better way?
Well, we'd have to see what the rates are on your credit card. So there's going to be two things. What do they charge you for converting currencies? And that should be on either your statement or you could call them and ask them. Um, and hypothetically, it would be more expensive, if they charge you more than if you were to get a better rate converting dollars to euros and then just spending in your euro-based local bank account.
And Wise is again going back to Wise. They have these multi-currency accounts that I think you can, transfer into US dollars into them. They convert them cheaply, and you get a debit card you can use abroad. And it's quite a cost-effective way of doing it. Somebody mentioned they're not, you don't want to keep a large balance in that account, but in terms of currency conversion, it's quite a good
Yeah,
solution.
yeah, they're very good. I personally use Wise, and then we also recommend using Wise professionally as well.
Somebody says, which 10 EU countries do you work with? But just to state again, that those are the countries that you can solicit clients in, but you can work with clients in other countries if they come to you. But which countries are those?
It's all the countries in Western Europe. So France, Belgium, Luxembourg, the Netherlands, Germany, um, Spain, Switzerland, Italy, I think Greece and Sweden.
You mentioned Portugal.
Portugal. Yeah.
Portugal, yeah.
Good one.
Um,
Yeah.
so there are a few people asking, could they get a copy of your presentation? Again, I think email Shane directly. Hopefully, I did post his email in the
Yeah.
chat. So just have a look there and email Shane. He'll be happy to share those. Um, Yeah, there's somebody saying, and I've seen this question before, if they live in Spain, for example, and it's really a tax question about if they can, how they get that information from the Spanish tax authorities about the taxes they paid in Spain, so they can file a US tax return. But I think you just ask the Spanish tax authorities if you don't have that information on already. Um, or your accountant in Spain would be able to provide that too.
Yeah.
Um,
Yeah. Typically, you pay taxes in Spain in June. You file an extension for the US until October 15th, and then you pay there. You file there.
so you file in Spain first, as it were, and then yeah.
Yeah.
Um, some more questions about ETFs. What if the American ETFs are in a traditional IRA in the USA? Can you then buy them I guess, as an American living in Europe?
Yeah. Usually, yes.
Um, on being an institutional investor with Schwab once abroad, would this allow you to hold just US ETFs or also US mutual funds?
Mutual funds, no. And mutual funds have to be registered where they're offered, and none of the mutual funds from the US are registered in the EU. So it's just going to be ETFs.
Do you have clients living in Canada? I think that comes back to the um,
With the US firm, we do. Yep.
yeah. So I guess if you reach out to Shane, yes, I think it's the answer. Um, As somebody saying, can't see anything in the chat. Hopefully, I've posted some things there. Somebody shout on the in the Q&A if they can't see those. I've posted Shane's email address and the tax firms I mentioned. Let's have a look. I think we're on the hour, and that's the majority of the questions, of the 60 questions. There are a few that are very personal or kind of tax questions. Um, so let's see if scan so I can see anything we've missed. Um,
Well, let me just say for all of the attendees, we're offering a complimentary consultation. So if you're interested, if you have any further questions, you can go to our website, contact us, and you can schedule a call with me, and we can walk through, your situation in more detail. And I'm happy to help.
okay, and just in case there's an issue with the chat, I'm gonna the email address to get in touch with Shane is EAFA uh, for EuroAmerican Financial Advisors, EAFA at EuroUSAFA.com. So that's EAFA at EuroUSAFA.com. And with that, thank you very much, Shane, for taking the time.
Of
It's
course.
a great presentation. Thank you to everybody for joining us. Um, we have one more presentation today coming up in just under an hour, which is on investment environments and themes for US expats in 2025. So considering continuing the similar themes. If you haven't already registered, you can do so at usexpatconference.com. And well, yes, thanks once again, and we hope to see you very soon.
Cheers. Thank you, everybody. Have a good one. Bye for now.